So another FOMC fake out. We know the real reaction comes today and tomorrow, and the bears came out swinging today, trapping some bulls. Still weakness, bears keeping their control, and RSI, a nice helpful guide for looking for bearish entries. I'll show you what I mean. So a gap down open, trapping a lot of longs. We can see on the futures chart, we had the drop. This is the NASDAQ. The drop happened after the bull move into the close yesterday, held on a little bit after hours, and then just completely rolled over, fell off a cliff. We then had an hourly bear flag at the open, and bears kept complete control from there. So that gives us a daily bear flag. We certainly saw them all on the daily chart yesterday, very quickly confirming them. The good news is that gives us a nice new clear benchmark level. We knew the daily lower high was the most likely scenario. We couldn't say where it would form, but now that is our guide for the daily downtrend. So anytime we bounce under that level, it's just another lower high. If that level breaks, it will be notable to us as far as breaking the daily lower high pattern. But for now, we are still with bears keeping their complete control. And so looking at the hourly time frame, we have a resistance level of 273.31 to be watching. A little bit of a bounce after hours right now, and keeping an eye on RSI. So as we know, being a bounce trader and loving the back burner oversold conditions, if I'm looking for an hourly high or low, I'm looking for 5-minute oversold conditions. If I'm looking for a daily high or low, I'm looking for hourly oversold conditions. We're seeing the exact same thing in the opposite, with the bears getting that favor. So you can see more and more, I'm just noticing how exactly inverse all the signals that we used to use in the bull market are acting in the bear market. Just with the energy sector rolling over the last week plus, watching for it to be a laggard bear. That was something that we had from the bull market in terms of watching other sectors take turns running. So QQQ the last 2 days, not today because we didn't come anywhere close to a meaningful bounce, but if you look at the 5-minute RSI the last 2 days, the highs of the bounces, the last 3 days prior to today, the highs of the bounces are marked from 5-minute hitting 70. So this is just one signal, but it's a confluence of signals. Okay, we're bouncing. I'm scouting an hourly lower high. I can be scouting hourly EMA 12 resistance. 5-minute RSI hitting 70. If all three of those things are happening, that's a probable setup that the bears are looking for. So back on Monday, our hourly lower high was 281.22. 5-minute RSI hit overbought. And then on Tuesday, we had 5-minute RSI get right up to 70, marking our hourly top of the move. And then yesterday, many times, just couldn't get over 70 at any point. So we're seeing bears using that as a signal, looking on the hourly at the EMAs. Again, looking in the last few days, not yesterday, but the EMAs were rejecting the price to help align. Again, looking for multiple things to align to have a trade setup that we can be confident in. So I'm keeping an eye on that. And not only, the same thing in a bull market. So in a bull market, I would use that as a signal for bounces. And it would also be, it would give me information when that did not mark the hourly high or low. Meaning, we would have a pullback, we'd hit 5-minute oversold conditions, we would bounce, and then we would drop to a lower low. And that would tell me, okay, the market environment is shifting from a really strong uptrend, and some more prolonged consolidation is likely taking place. So if we see bounces hit 70 RSI on the 5-minute time frame, pull back, and then lead to a higher high, that's something we can be keeping an eye out for as well. And that happened yesterday, but the FOMC reaction was definitely making it a bit more of an unusual day, not your standard regular old day. But again, just a little blip in terms of how we can use RSI, no longer for buying dips. I don't care about 5-minute oversold in this market environment. It means absolutely nothing to me. But 5-minute overbought does, because it's going with the trend. S&P 500, same deal. Nothing different here. Daily lower high and lower low. New benchmark resistance level is 383.90. Next levels that we're looking at on the way down, there's some gaps back here to be keeping an eye on. I'm really just using the hourly trend. I'm not even watching previous price levels much. There is a confluence of support here. You can see we had a lot of price action around this level back in early 2021. So the low today was 364. We bottomed in the 365s, 362s. It was prior resistance here. So just an area with a decent amount of price history And there's a higher probability that a congested area like this acts as support versus an area that has very little in terms of previous price levels. You know, pretty much from 398s to 391s, there was nothing. And so I would bet we fell through that pretty fast. What did I say? 398s? And that was this drop here. Just right through it over 3 days. So bulls are going to attempt to bounce. It doesn't mean anything unless we see an hourly trend change to the bulls, and then we will zoom out and watch our daily lower highs, knowing if we do not break the daily lower highs, nothing changes. So bears have complete control, and the most notable thing, and it's the thing that I said first thing this morning when I was signing on to the computer, and it was just me making a note to myself, but obviously sharing it with everybody in the chat room as well, to remind myself, even with this big drop overnight and this gap down open, we can absolutely keep going down. The reason? Just a reminder myself, daily, 4-hour, hourly, they're all not oversold. So bears are hoping for hourly bear flags on the morning, and the low pre-market is support. That was right before the open, and that confirmed. This was the drop confirming the hourly bear flags, and the bears controlled the morning. So again, I have to, that's me visually reminding myself, or I should say verbally reminding myself. I guess I was typing it. I didn't say it out loud. But reminding myself because I look at it and say, wow, we're seeing a 2% plus lower open and a gap down. I'm going to be looking bullish. That's what my mind wants to say. But just reminding myself we can absolutely keep dropping, it helps me to not be too biased on the morning. So tomorrow we have quad witching. We've got the SPY X dividend date. And that is going to lead to a drop in the price of SPY. And everybody's going to wake up and look at the computer and say, oh man, SPY is getting crushed. And then they're going to remember, oh yeah, we're down an extra $1 plus $2 because of that dividend distribution. The Bank of Japan 10-year yield appears to be exploding to the upside today. And I have to look further into it because I don't fully understand what's going on there, because there's a lot of discrepancy in what prices are being given from what sources. So something to look into if you are interested in that, but I don't know enough about it at the moment to speak on it with any kind of insight. But just a little note for you to check into if you're interested. Semiconductors, daily lower high and lower low. Again, bears in absolute complete control. If you are looking for previous support levels, obviously we know the broader market has to find a bottom for the semiconductors to find a bottom, but I just put a support line there and then I scroll back. And that helps me say, okay, where were we? What were we seeing back in this point in time? We can see 200 psychological acted as resistance. So potentially some support there. We'll see. But again, I'm just sticking with the trends. I'm not looking personally for any previous levels from years ago to act as support. I'm just using the trends as a guide and those little clues, those RSI clues, volume clues, and just keeping it simple. If we're in an hourly downtrend, the bears have full control. And then if that changes, we'll zoom out and watch the daily. Tesla headed down to 620 today and held it, but just barely. So again, there's a handful of names. We can group different names individually, names that have clearly dropped to lower lows, names that have weekly tightening ranges, and names that have a little bit of a double bottom on the daily. And so Tesla has this double bottom. Again, NVDA has this base of support in the 155s and 154s, which is still trying to hold, but just barely. XBI, biotech sector, now has a triple bottom. XBI bulls showed up. There was a very notable correlation shift. The correlation shifted, and if we look at XBI divided by SPY, so how did we go from weaker on the morning and then everything changed? What led to that change? And the answer is bulls defended the low of yesterday and formed a double bottom. Or not the low of yesterday, the low of the week. 62.13, we held it by 3 pennies. From that point forward, a bullish correlation developed. It doesn't take much to shift those correlations intraday, which is why we have to be staying on top of them and recognizing that they often shift. And so this helped the biotech bulls form a nice long lower wick and have this base of support, but we know it doesn't mean anything. We can't have any confidence that it's going to hold unless we break 66.36, our daily lower high from yesterday. If that level breaks, we're certainly going to be paying attention to a solid hold of this support level. Had another point I wanted to say, and I just lost it. Correlation shift. Saw it today on NIO. First thing this morning. NIO showed a lot of relative strength in this first 15 minutes. Look at what QQQ was doing. First 15 minutes, red, low of the day, sideways. So a drop and then sideways, while NIO is nothing but up. I recognize that bull correlation. And I say to myself, okay, well, if the broader market does see any kind of bounce, NIO is positioned really well to benefit for it. And I've been watching NIO with a strong bullish correlation 2 days in a row. So I hopped in bullish on NIO during brief 1 minute consolidation in the morning here. And so I had an entry, I believe on this little pullback candle, I had an entry in the 1975 range. I sold half on a little move up, and I placed my stop break even in the 1960s, and I stopped out. And there was a very clear correlation shift here as well. And that correlation shift was caused by rejecting from the high of yesterday. We rejected by a little over 1%, so it wasn't like a double top. And I felt that I noticed the very clear correlation shift happened when a large order showed up at 1980, a large ask. So a large amount of shares on the ask at 1980, and that happened a couple minutes after that high, and from that point forward, it was all bears. There was another point that I recognized here, hidden shares. What do I mean by hidden shares? I mean an iceberg order, which means you see 1,000, 10,000, whatever it is, shares, and then you see, let's say it's 5,000 shares, and I see 15,000 shares bought at the ask, not budging that, and hit multiple times. We hit it, we pull back a little bit, we try it again and hit it again. We keep buying more shares than are showing, but it's not budging. And so that led to another leg down. And in hindsight, I did a good job of protecting my bull position and stopping out break even when being wrong in that wrong direction. But the failure for me was the quick shift to going bearish. And 1930 should have been it. I did recognize it live when I was trading and should have hopped in the 1920s, stuck my stop over that iceberg order, because if it gets taken out, then I stop out. If it doesn't get taken out, that's the cap. We're not going any higher if that hidden order doesn't break, and that would have led to a nice 3% plus to the downside over the next 10 minutes. So just a little hindsight there, but overall NIO still very strong. Daily inside bar. If the inside bar breaks bear, we're going to scout a higher low compared to 1584, and it'll just be this tightening daily range that we will look for a break of next week. But again, still a night and day difference between how it looks in most names. And BABA still pulling back a bit into our range, still tightening up. We could tighten up here for another month plus, but we're keeping an eye on this tightening range for when it breaks. We will be looking for volatility and follow through. I'm a bit all over the map today. What were we talking about? What name? Tesla. So Tesla's got its base of support. Healthcare. So daily lower high set, lower low. Bulls bought the dip in healthcare. Same with the biotech sector. We closed up near the high of the day. So all things considered, bulls are happy that we weren't crushed. For example, XLV down 1.5%, IWM down 4.6%, energy down 5.6%. So it was down the least out of the major sectors that I'm looking at, but it's still a clear hourly and daily downtrend. And we might have changed, no, very close to changing that hourly trend into the end of the day, but didn't do it just yet. Financial sector, bear flag confirmed. And again, another point about the RSI, SPY right now is not oversold on the daily. We're not oversold on the weekly. Yes, we are close, but we're not oversold. And we've been oversold on the weekly plenty of times to know it can happen. So that's what's keeping me from getting too aggressive. And that's what's keeping me looking short until I have a reason not to. Again, the only time I'm going to step in front of the speeding bear train and look bullish in the face of a ton of bear momentum, it's going to be when we are at historical RSI bounce levels and there's a bunch of crushed time frames. I look for that capitulation kind of move. And we're just not beat up enough for this to be short-term capitulation for me. Doesn't mean we have to keep dropping. We can see, a reversal come in a different way, but I would much rather buy at higher prices once that momentum shift has taken place. IWM, big time drop, daily bear flag confirmed, breaking the low of 168.46, and big red, not oversold on the daily, hourly downtrend, you get the idea. Biotech sector is standing out, relatively bullish today, still down 2.6%, but it did hold support, and I will be interested if we break 66.36, it'll definitely get my attention for a weekly double bottom, but if we don't break that level, it's just patiently waiting for a bear break. That's why we must get over 66.36. Talked about NIO. So looking at the dollar pulling back today. And again, everybody's looking at the dollar saying the dollar is big and red. Why is the market down? The 10-year is red after a double top. Why is the dollar down? Keep in mind that correlations, how often have we seen a one-day correlation shift? Oh, this is different. And then it goes right back to normal. So for it to be a notable correlation shift for me, it has to be persistent for multiple days. So if we keep seeing a direct correlation between the dollar, the 10-year, and stocks tomorrow, and perhaps Tuesday, we have a holiday on Monday, then I'll say, okay, this is very unusual, this is different, and this is notable. One day is not enough to be notable for me. So definitely gonna be paying attention, but this might have to do with, what's going on in Japan. And again, that's fundamentals over my head at the moment. Haven't had enough time to put in research. I've just been focusing on the flashing numbers. And so wondering if that has an impact on what we're seeing in the dollar and the 10-year. Netflix documentary about psychedelics is coming out. And I'm interested in that sector for an eventual hype run someday. But I haven't seen it, maybe a good documentary in terms of giving some information as to why many people are excited about this sector over the next decade and implications it can have on medicine and the healthcare space. So metals up today. As I mentioned yesterday, I don't care about anything as long as we're in this sideways range. I do have a little bit of metals exposure, and I will add to it if this range breaks bullish. But until then, it's a small enough position size that, I don't really care if we're sideways within this range. So bulls are liking the fact that we are inverse to the dollar in the metals, but resistance is looming overhead. And silver, same thing. So nice bounce, but still range bound. Miners, a bounce as well, not nearly as meaningful as the broader market was down so much, but at least it's some green. And again, we already broke to the lower low here. Energy got absolutely smashed today. So again, I've been shorting energy, and I definitely exited a bunch of shorts today after we were down 6% at one point. So I'll be interested again in energy, whether it's a short for an hourly lower high or a daily lower high. Oil bounced. So again, this is a move that is we're not seeing oil show a significant amount of weakness. I look at this weekly chart. No red flags whatsoever. But the energy names, again, absolutely crushed, down 6% at one point today. And a huge drop. This is an 18% drop in 7 days from our lead bull all-time high sector. So a very notable shift, a lot of money leaving, that's high volume. And, speculating, could this be because Biden and the White House sent letters out to the oil executives about price gouging? I don't know. Don't care. Was just looking for it to be a laggard bear sector, and it followed through wonderfully. And we'll look for an hourly lower high, anything under the high of today. Did utilities get crushed again? Not as bad, but still dropping. Daily stair-step pattern, lower high every day, 8 days in a row. Bears in full control there. NEE is a utility I've been keeping an eye on. Dividend name, long-term uptrend. My dad worked for the company. So I'm watching this pattern and drew this resistance line before we pulled back. So now I'm watching it even more closely and keeping an eye out to see if there's a playoff of 66.84 support to look for a weekly high or low and for this range to continue tightening up. Natural gas, daily bounce, scouting a lower high, potentially being set already. And Key support will be down at the low, 6975. So now we have a little range, the low of the pullback, the high of that bounce. Bear cross of the EMAs closing in. We came real close back here for this big pullback, and it didn't cross bearish, but it'll be notable if it does and if it starts to act as resistance. All right, that's it. We'll see what tomorrow brings. Shortened week next week. Bears in full control. It'll change someday, but not just yet. And another example, crypto. So I talked about the bear RSI last night. Crypto names bounced notably. They got some daily bounces going. And look at their hourly RSI. This is SHIB. Hourly RSI hit 70. That marks our top and a notable pullback. There's just a bunch of them. DOT, hourly RSI, breaks 70. We pull back 15% from there. Big move up, but a big pullback. 25, 28% up, 17% down. But again, my point is using the RSI reverse to how we've been using it for a long time. We would, after a big breakout on the daily, everybody in the Chart Guys chat room was buying first hourly oversold conditions, and it kept working really, really well, as it does in a bull market. We're seeing the exact opposite. And so as long as that happens, if I see that happen, I say, okay, bear control. That is exactly what a bear wants to see in a bear market. All right, do good things. Have a good weekend. These flowers, I forget the variety, what they're called, but I planted them. I have them right now. But last year they were up in a pot around back by the little waterfall back there. And the seeds washed down and came out this pipe. And now there's some volunteers. That you can see it, but the fish have been making nests along the edge of the pond. Yeah, you're not gonna be able to see it, but it's cool. It almost looks like big footprints because they dig out these little circular trenches that they put their eggs in, and then they just hover around in there guarding them. But they go all along the edge of this pond, and then the other pond. There's probably 10 of them. The dragonflies help keep the mosquito population down. When I first moved in, I thought there would be a significant amount more, but this pond ecosystem regulates them pretty well.